Hey. Here we are. We went from a dreaded Wednesday all of a sudden into a Tuesday. I know you guys did that last week, but hey, guys, welcome in. Come on in. It's your Tuesday market chat, Tuesday show, whatever you want to call it. We're here. It's GP. Hi, GP. GFDI, Nicholas. Hello, Nicholas. And it's Bags. What's up, y'all? Nick,
not a mucho.
Nick, what's going on? I don't have any charts pulled up here, but when we were last on the Community to Rip on Wednesday with Matt Tim Payne, and shout out to Matt for joining us. Really appreciate you, Matt. We had a little doomer talk going on. I don't think nobody was saying going to zero, but I could feel the negativity emanating from the four microphones. Is that accurate?
Yeah. Again, welcome to week 23 of the motherfucking range in the NASDAQ. Range bound action, I think, is, again, as we've said, is probably the most frustrating and kind of difficult action. Like, I think chop generally brings out the worst in a lot of us. And what kind of happened on Thursday, Friday, somewhat felt like a bit of a relief. Just in that, price somewhat kind of broke the upper bit of that range, ultimately putting in or at least where we're currently sitting, it appears as though we're putting in another higher low. Yet at the same time, we're still in the range. So if you're going to take this kind of a step by step, where we're kind of pausing is the 50% retracement from the most recent high to low. And to kind of like leg into bullishness, we want to see, or at least I want to see the 615.50 on the Qs. I want to see price get above that and hold. On like in the shorter term, just on the most recent low to high, the 50% is kind of is 605. So kind of even to kind of even touch on what Cookie talked about a little bit, various candle lows getting taken out. I think what really, we could use yesterday's candle as kind of risk, I think, here. What do you mean by that?
You use yesterday's candle as risk. What explain?
Yeah, so if you measure from the most recent low to the current high that we're at in the last, 4 trading sessions, that goes, 595 up to 617. interestingly, the 50% retracement of that move is 605.50, which is in alignment with yesterday's low.
Yep.
And so I don't think it should be neither worrisome or concerning to see price kind of pause where we're at the 50% of the most recent high to low. On top of that, like it's mid-range. You're kind of, like just looking at the price structure, it makes sense that we should pause here. Yeah, certainly it'd be fucking great to see us like V face rip out of here. I just don't think what we're getting today should be surprising. I kind of pointed out yesterday, I didn't really feel like, unless you were kind of loading off the open, there wasn't really a need, in my opinion, to chase price too much yesterday, because I thought I was thinking that we would get this kind of action today. Like if we're going in reverse of like your normal, red Monday, turnaround Tuesday, chop Wednesday, sheep shaking Thursday, strong close Friday, we're getting kind of the opposite, where the green Mondays are a little bit more difficult to navigate because it throws a wrench in kind of that pattern. So being that we had such a strong day yesterday, rather than getting a turnaround Tuesday, it's kind of like, let the open kind of play out, or look for weakness on either a weak Tuesday open or, a weak Tuesday, like AM, so it's just, again, like kind of layering these things, and kind of, again, if you're coming from this is also kind of saying, if, you're coming from a cash standpoint, like you stopped out of everything, where if, you didn't get stopped out, you're probably still sitting probably pretty happy. At least on the indice side. If, again, back to individual names, yeah, sure, there's been a lot of like an obliteration. Interestingly, the IGV, I think, is something we should probably touch on, just being that some of the software names are starting to kind of perk up,
get a little
and
perkier,
looking a little bit overdone.
Hey, so for me, right, like I love a week Monday, right? Because how many times have we had a week Friday, a week Monday, and then buyer step in Tuesday, Wednesday? That's the setup I like. But coming into Friday with the market up, I was like, they're going to sell this all the way back down. This is going to be a bloodbath. But then when it wasn't, it was like, well, this is going to stick. And then yesterday, Monday, was sort of the confirmation of that, right?
Yeah.
But I wouldn't be surprised to see it come back down to 605. GP, you hate the market. It sucks. What do you have derogatory to say about this price action?
Well, let's go back to talking about what we talked about, right, for the last couple of weeks, especially the last month, which was the market can't go anywhere if tech doesn't bottom, right? And or stop selling is what we said, right? It doesn't need to outperform, it just needs to stop selling. And as soon as they stop selling on Friday, you saw that candle in the Dow. That's what I'm talking about, right? So we're still kind of in a precarious position, but the important part of, I know people want real-time hours, tags and stuff, but if you look at the futures, right, go to the NQs, and I'll tell you why Thursday's overnight low was insanely significant. And if we fail it, you can short this market with both hands, both feet, pull the hair out of your ears, everything, and short the market. That's my opinion.
If what?
If we fail the Thursday overnight low, it'll be free reins on shorts, in my opinion. I don't think that's what's going to happen, but the price action has been wonky, so something to keep in mind. That pivot low of the NQs was the low of FOMC.
It was the low of the century.
It was the low of FOMC, the first rate cut in 2025.
Yeah, that was right here.
9/17 is the day that they cut rates
Was
for
it
the first
9?
time in a year.
Oh, there we go. 9/17.
Oh yeah.
Like bang on, right?
I was gonna say it's
yeah,
also the low of like
almost
the
2 pennies.
10-10 and
240.
basically
Yeah,
the low of like
it's
10. Yeah.
that's the first thing, right? Like it's a huge policy shift, right? We're talking about rate cuts and stuff like that. So we tagged the low end of the range on the policy shift that began. So if you're taking macro into technicals, this is the way I kind of look at it, right? It wasn't a policy shift because they're cutting rates. It was a policy shift that they're easing, right? And they're going to bring on an easing market. And it might be gradual rate cuts, but they're going to introduce liquidity. They're changing the QT, they're ending QT, all this other stuff. So we tagged, so it's a big macro area, right, in general. And so we tagged that. We also tagged the Trump disaster candle from 10/10. We also tagged the 11/21 candle from a congressperson speaking in the market reversing 1,200 points. Stupidity as always, but that's what we get these days, these massive red candles and hardly any follow through afterwards because it's zero DTE world and we just live in it. So to me, this is a very significant point of reference. Yeah. And if we break this and we get confirmation on the break, right? If it's a big break and then we confirm with another gap down or another move down, you can literally. Problem is everything's already at like disaster lows. So shorting is going to be like, it's going to be a little bit of a mind screw, but I think you go with some of the names that haven't been destroyed for the most part, like Apple. Apple's been contrarian, but like Google and names that are Microsoft or Meta or any of these names, if this market starts to take those lows out. I don't think that's going to happen. I think that was the final test of the FOMC range, and we're on the verge of now having broader participation. I would like to see everything kind of go up together, but we haven't had that kind of market in a really long time. So what you want to see, I think, overall is names like the boomer stocks consolidate. I don't want them to sell off a lot, but just consolidate, right? Like RCL, like look at ExxonMobil's move here, right? Like this is what. So, yeah. So go back to RCL for a second, right? Why I think if you go back to RCL for a second, right? I'm getting there. So this was 7 inside days post earnings, and it tried to break out today and failed. So that's what I thought was going to happen today. I had taken a small long position to test it out, and as soon as it failed it, I stopped out of that position. But my thought process was in where the Dow and the rest of the SPY stocks, right? Not the 7. If they didn't push up and out last week, then they're probably going to push up and trap, right? That was my thought process here. And so RCL is a candidate that I think can come down. I think it can come back and retest the breakout, right? Which is that gap fill area, 280, whatever. Anyway, if that happens, I think you see money rotate back out, and you're already seeing it. Not necessarily software. I know people want all of software and then some, but look at names like Oracle, which had 2 massive days. I don't think we're going lower, but if we do, you got to be nimble in this market because any failures is significant. I think you have a well established range, and if you don't stay nimble with exits and entries and stuff like that, they're out to destroy you, divorce you from your shares consistently. And so like if you're looking at names that are standouts post Stockopoli, whatever. I'm on very little sleep today. After the Armageddon of last week.
Stockpocalypse.
Yeah, I couldn't get there.
So but if we take out that pivot low, that let's say 24 250-ish. Are you thinking that we head back down to like 2200 is kind of the next logical spot that we would kind of gravitate towards? Or are you thinking like something even like might be sloppy or however it plays out, but something more significant than that?
So the way I'd be looking at this in general is that I think we talked about this. If we get to 6 months of this sideways action, I'll be lightening up a lot of stuff because major tops have happened in 4 to 6 month distribution cycles, right?
This is month 5.
I was just gonna say month 5.
Well, we had the breakout month, and now it's month 4, right? So we're four candles inside that. So if we get 1 or 2 more, yeah,
Sure.
I would start to trim stuff out and wait for it to give us a direction. But you can see that we had that, what do you want to call it, the dragonfly candle or whatever, on the monthly. We're struggling to move higher. So Nick, I'm not saying it's a major top, but it could potentially turn into a major top.
Yeah.
And it depends on how long they do this distribution. You know the rule of trading. If you have a bull flag or a bear flag, and that bull flag just keeps bull flagging, or that bear flag keeps bear flagging, they usually do the opposite of stuff.
Yep.
Right. So, as in, it's not a bull flag, right?
Well,
bull
no, I was
flags are-
laughing at
My mouth farts.
Yeah.
So not wet blanket kind of stuff, but got to keep your wits about you in this market. I don't think that's going to happen, but if that happens, we could potentially go lower. I honestly think we're going higher, much higher, but you need to see the price action support your views. And
Yeah,
so far,
totally.
all the price action we got was on Friday, and then it's been kind of a shit show for the most part. And so we'll need confirmation. And the recent level I would watch on the NQs is at 25,312. If you can bring up the chart real quick, Ben, of just the last 2 days.
Of the NQ?
At a 5-minute level or 15-minute level, doesn't matter.
Bags, I think if you put it back on the way, like us on the other thing, they can see the chart better. So like that, I think.
Oh, I thought I did that. That's the reason why I switched it back.
I think.
Yeah, it gives more space.
Yeah.
There's
So go to a 15-minute chart. Right. And cover like Friday to today, right? I know, Nick, you were talking about 50% retraces and all that other stuff. You can see a potential inverse head and shoulders forming and all that other stuff. But do you see that 25,312 was a level that happened right around 1 p.m. yesterday? Randomly, it was a big spike down for no reason whatsoever. So, and we've been basically trading against that since yesterday. So if you're looking at a short-term price action and you want to see potential weakness and stuff like that, you want to see that get taken out meaningfully, right? If you want to short. So just something to keep in mind from a short-term perspective. That was this, we're in an uptrend all day, right? We were trending all day yesterday. And then at 1:15 or whatever time that was, comes this random ass sell for like 100 and something points, right? So basically kind of telling you that there's somebody sitting there who's looking to kind of break it down, right? There's a seller that's there. Happened at 120 exactly. So just keep that in mind. And if you can see the price action, Nick, if you pull up on your chart, you can see it closer. You can see we tried to break that down how many times so far in the last, what is it, one in the last 24 hours, right?
Yeah.
So basically since 1:20 p.m. So even right now, as we were just starting this podcast, we tested, we wicked off of it, and now we're pushing higher. So this could be viewed as potential distribution in this zone at the 50% retrace, or it could be viewed as accumulation for further upside. So there's your short-term levels in terms of what I'd be watching on failure. And so far, we've gotten a bunch of false breakdowns at that level. So it's not like an automatic short, but it's something to watch if we lose that meaningfully.
It's still a wall of worry to me.
Yeah, Ben, I'm not arguing that, but
yeah, no, I know you're not. I'm not contending that you are. What I'm saying is all these pull-ins make it's never as good as it seems, and it's never as bad as it seems, right? And when you have huge volatility like we did over the last, what is that, 3 weeks, 2 weeks, it shakes folks, right? And yeah, GP, I think you're right on with your analysis. And again, I just think that adds fuel to the fire of, oh my God, it's worse than I think it is, right? Which to me, that volatility tends to be buying opportunities. That's all I'm saying.
Yeah. And so I don't discount it, but because of how long we've been in this range, you got to take both sides of that conversation because
100%.
Yeah.
I'm with you on the longer it stays in this range, the more likely we are to fail, right? Because right now we have tested the downside of this range 3 times while we've tested the upside 2 times. And that doesn't mean we're not going to come back up and try to test it again and potentially break out. I think all that's fair and fine and dandy. But right now, we've got my favorite chart pattern in the fucking world happening, staring you right in the face. Right. So, well, I'm not saying that plays out. I don't want it to play out, but I'm with you. The longer it stays, let's say if we have this is week 2, 5 to 6 more weeks, which plays out in your 2-month thesis, GP. I think you're probably right. Downside's more likely than upside if we don't break out before then.
Yeah, we don't we have good earnings. We have the AI boom, and Microsoft just took a slow but steady 30% drawdown. So for all you bubble talkers and shit like that exist in this marketplace, you can shut the front door. Bubble, you don't have one of the biggest AI players in the market have a slow and grind them out drawdown of 30% in bubbles. Bubbles are bubbles because they are quick, powerful, and shake you out, right? Like if you go back and study price action, even during the .com crisis, when everyone knows that was a bubble, you can see 50 to 100% moves in stocks overnight, and that's bubble territory, right? Like steady, slow grind down is rotation. It's not anything else. But
so let's
talk about stocks that we like as well out of this.
I would love to, and I think this goes into where I was pivoting for us next. Is while defensives and cyclicals have been great for the first 6 weeks or 5 weeks of the year, if we break out and go higher, I don't think those are going to be the fastest horses.
Yep.
I think it's a trap, right? Now, if we are to go down and we're unable to break out higher, then you're probably comfortable in buying those value stocks much cheaper. I mean, we look at Exxon. We've talked about Exxon before this breakout, right? I think, we had a show on this day where it was like, just wait for it to go higher. And now 25% later, right? So or 20% later. I'm not saying you can't jump onto this move and ride this move, but I'm saying if you're expecting this to crash back into 125 again, it's probably not going to be faster than something that all of a sudden can do 5-6% in a day. Do you have any of those names that can go 5-6% in a day? I have one. It did 30% today. Oh my God. iCore Holdings. Nick, this is a case of I wish I had bought like Wolf. Wolf gapped up yesterday and I was breaking my heart. But I can't catch them all. And I want to know how you guys pay attention to the chart setups that you like and are able to buy them. Nick, you bought TerraWolf
did.
yesterday as it gapped up, and it's already up from the gap up 15%. And I'm like, it's too damn expensive.
Wolf was a little easier, I think, than your ICHR because, Wolf didn't full on break out until today. Like as it's breaking out right now. We had a cheater entry yesterday through 1550. That was kind of a pivot high. But another alert should have been set basically at 1650, 1660, and that was kind of your bigger entry. Obviously, we want to see that kind of hold today. I kind of talked a little bit about it yesterday. I kind of put out a big tweet about it. I've got, as it stands right now, I've got like 1,500 names on my master watch list, and I perpetually toggle between percent gainers and dollar gainers kind of all day. It's just kind of how I like sort through the list. And typically if a name shows up as either a top dollar gainer or top percentage gainer on there somewhere, it's an igniting candle, right? Like we've talked about igniting candles and how that we call them an igniting candle because it's igniting a move. And the ideal situation or scenario when those show up is still within a range or still within a bigger pattern build out versus like your ICHR where we're getting kind of an igniter candle, but your only entry was on an intraday, unless you entered it yesterday and kind of held, even though it didn't quite make a closing high out of that little range. Your only entry was pretty much buying off the open and then maybe setting a stop about halfway into the gap, or I don't know. I don't know where it depends on who you are and your style strategy. But, I narrow my master list down to about 100 where like on 100 of that 1,600, there's probably been somewhere, depending on current market environment, I could have alerts on about 50 to 100 of those names. Then from there, I narrow it down to like my favorite 10 to 25. And, alerts can be set everywhere from both highs and lows. So I'll set alerts at various pivot highs, pivot lows. I might set, like if I missed a breakout on like, let's say, I don't know, let's just say Wolf, for instance, right? Like I totally missed it. I might set an alert at 17 or maybe a little bit lower at like 1650, thinking if price pulls back, I might grab it on a pullback to the breakout versus like on the breakout. Kind of same thing. Like you're the one that, threw it on my radar, but the candle, the February 3rd candle is the reason, like that's the pivot high, the cheater. So it's like, you can use individual candles. You could use like significant moving averages, but like set the fucking alerts. Like,
So let's go through my lizard brain real quick, right? Like,
yeah,
we gapped up. What is that?
On ICHR?
No, I'm talking about Wolf.
Oh yeah.
So gapped up almost 8%, right? To start the trading day, and in your head, maybe not mine, like that indicates strength, right? Well, I don't want to be caught buying and that gets sold back down that 8%, right?
Sure.
So for me, I need to do a better job of identifying like this move is for real or this move is not for real. And that doesn't mean that I'm not bullish the stock longer, right? But at the same time, we're gapped up 8%. I'd like a little better discount than that. Not that I'm counting pennies, but at the same time, like it's up 8%. You took that trade with conviction, and I was like, God, this is like the worst case scenario on a Monday to gap up when I would like to have it red to be able to buy closer down in the base, right? So that's my philosophy versus your action. And maybe what I'm trying to distinguish is your conviction on your action versus my conviction on, man, I can't believe this already did this without me. And it's not that I'm a miserable bear wanting it to come back down. Like I expected a move, but I don't have a lot of faith in the gap up, right?
Well, yesterday was from the way that I was looking at it, we didn't get a clear breakout to highs yesterday, but we got follow through from a pocket pivot. So on Thursday, we of course we had that nasty down bar, but the following day we saw, like, again, what I would call it an igniting candle or a pocket pivot. It's a wide range candle. It's a huge body, wide range bar, above average volume, and it's slicing all of the major moving averages within that range.
So Friday was the bar that convinced you no matter what, I need to be in this trade.
Yeah, I mean, it would have been if it would have sold off right off the open, it probably would have been a massive gift. Like if we could have gotten a wick down into like 1450, like for sure. That would have been a phenomenal entry if we got it.
Sorry, I hijacked the what names we like as opposed to going through that. Anyway, sorry, GP. What's the name?
I have a couple questions regarding Wolf here, right? So as we do this analysis live for all you guys to understand the thought process, like if something gapped down 10%, would you start buying it? Not you, Nick Bags.
Oh,
well, I mean that it depends, right? Like if Wolf had gapped down 10% from here, probably, yeah, I probably would have.
Yeah, so I think it's a bit of a mindset conversation, right? Like, oh, because the market hasn't been behaving, it's been range bound, all that stuff. I'm not saying it's you. I think it's a product of the environment, right? But like if you were looking at this on a fairly objective basis, Wolf gapped over the range of the last 2.5 months, right? Or 2 months or whatever it is. That to you just tells you you want to find a way to like at least get long as it holds this level, right? If it keeps going, then you have pivots, at least like the recent pivot high of what was it, 1560, right? As soon as that 1560, the most recent sell candle, as soon as it took that out, it took out all the sellers. It was time to get long. I don't really watch this stock, but like I'm just looking at the chart. Right?
I don't either.
Yeah. So like to me, that's where I would have gotten long, because I don't think they're going to give you opportunity. If they give you other opportunities to get back in, then you probably don't want to be in, right? Like I think that's the market we're in right now for the most part. So if it goes back and like filled that gap, so you gotta find how to participate with stops, right? You can easily take 1560 and set a stop at 1510. So you have a 50-cent stop, which is 3%, and you participate to the long side.
So part of me, right, is like I have a smaller basket of 20, 30 names that I'm familiar with their charts, right? Yeah. So I don't watch Wolf. I'm not into Wolf. I was just looking through charts. I was like, that one looks pretty good. So after flagging it for the first time, it's very challenging for me to have the conviction on an 8% gap up to be like, I need to buy this. And Nick, I don't know if you've been involved with Wolf before or not. And if you have that much more knowledge of the attitude or profile of the price action, right?
Oh, I mean, it's a trade. Like it's a trade and it's a chart. I don't
exactly.
It's been on my watch list, sure. And I honestly, somebody at some point tweeted it. It's like, it's a crypto name, right? Like a miner.
Yeah.
So,
well, data. They're building data centers, but they are a crypto miner. So all these miners are becoming data center plays. How do you make what's old new again, right?
Yeah, right.
Hey, look at Cisco, man. So
look at IBM, right? Like I mean, we can go on this for days. But my hesitation is I trade the things that I know. I feel like that is my my strength, what I do best, right? And it's hard for me to pull the trigger on something that I don't know, right? Not in the biblical sense, but just I don't know it. But Nick, for you, like it's just a trade to you, right? And if you get stopped out, you get stopped out, big deal, cut the loss and move on. If you do, you enjoy the upside. And I guess that's where I need to coach myself better on these shorter term trades, which I'm not hugely active in. But this was an opportunity I saw similar to ICHR, which is just having a crazy fucking day. But that's neither here nor there. Anyway, I think it's just mindset and how we do what we do, and we can all learn from each other on how to improve our own game, and that's what I'm trying to do.
Yeah, I mean, I've been pretty lazy with it, like with my journaling, but I think for those that are relatively new to trading, or like active trading or investing, and they're actually writing out their trade plans, identifying whether or not it's a trade or investment is a big part of it, right? Because it's somewhat managing your expectations and probably influencing your sizing as well. Like if it's just a trade, I hit it and quit it, well, then you can size up and just play the momentum. If it's like an investment, you're probably legging in on both strength and probably weakness as well. Like you have conviction in that name that is probably layered by your fundamental analysis and your overall viewpoint of that business rather than just the chart. The chart's just a timing tool then at that point rather than just a ticker, just a trade.
All right. Sorry, GP. Back to names we like.
No,
I didn't mean to hijack the show.
No, it's fine. It's perfectly fine because like when you're used to stocks, right? Like I don't ever take Tesla on a high a day because the assumption in this stock is every high of day is an opportunity to trap you and your calls, right? So, and they do it consistently, has been for a long time. So, like knowing characteristics and personalities of stocks is really important as well. So if you don't know Wolf, then there's so many other trades that you'll get 15, 20%. That's not a big deal, right? Ultimately. So like
Nick, had I paid attention, this is exactly what happened, basically, because this is when I put ICHR on my list, right? That this was the week. I put it on Sunday and Monday it gaps up. So this is the same situation as Wolf. Had I looked at the ICHR chart more closely, I probably would have identified that.
Yep.
Saying. When you get those big gap ups, again, for me, like if ICHR was one that I was looking to trade, or had been, I would have basically, if I wasn't feeling overly aggressive and said, fuck it, I'm just going to take a position at the open, I'm waiting for that first 60-minute range to get put in. So, basically your entry would have been through kind of 46 and a quarter. And the way to play it might be letting a day trade turn into kind of a swing or momentum trade where, on a day trade, you're either stopping out if price kind of gets back in within that 60-minute range or that first 60-minute low gets taken out. So on an intraday basis, you're probably sizing up on a move through 46 and a quarter. And you're generally, at least I would assume, you're not going to be carrying day trading size into a swing trade. I don't know, unless you just have balls like that. So you'd be sizing down, and then it would allow you to kind of catch a bigger kind of move, and kind of play with it. I think on a how it's set up now, the other way that you could play it is basically having an alert set at today's low and today's high. So, tomorrow, like let's say you get like a gap down to, I don't know, let's just say 44. You might want to throw a starter on and see if it catches some follow through. Even if it doesn't, you're getting an entry kind of like mid range or on some weakness. And then again, your stop is underneath today's low. I think when you get these high volume candles, for whatever the reason is today, the highs and lows like to get tested of those high volume candles. So, I don't know. Again, like back to alerts, like, you set the alert for a reason. It's to bring that chart, to your attention. Like it's saying like, oh, something's happening here. It's not necessarily saying, oh, I need to enter it right now, but bring it back to your focus list where you can kind of start paying attention to it and find kind of your cheater entry or like your confirmation entry or, however you want to play it. But
just more balls. That's what I took away from it. Just more balls.
More balls. More
GP,
balls.
what's some things you like out there in this world? And then we'll go back to Nick on some things that he likes out here in this world. So maybe I'll learn something else new today.
It's a crypto name, and I put it in the chat already. Huh?
ICHR?
No, like one of the major crypto names, right? Circle.
Oh, yeah.
So the one thing I'll tell you about Circle, what I like about this, compared to Coin, compared to MicroStrategy, Circle was one of the few that engulfed the prior 2 days range, and also did it on higher volume than Thursday. MicroStrategy did not, Coin did not, Circle did. It's also been absolutely destroyed, and it's part of the IPO base. So I think you have a stronger chart, so to speak, here for the short term, and you can push towards that 50 SMA that you have there.
Yeah.
Which from 60 to 78-ish is a pretty good return. It's about 20%. So if you're taking on a trade, I like this one as well. The other one I really, really like out of this is obviously Tesla, but it's the graveyard of all calls and put premiums. And until there's a catalyst, this is it, right? This is what you get, right? So
go buy more Tesla, Arson.
Yeah. The other one that was strong, Tesla's not as strong. I just like the setup. The other one that's really strong in all of this was Enphase. Right. So like if you compare what Enphase did last week versus what FSLR did,
this is like a perfect example of what you would hope ICHR does.
Yeah.
And sorry, I didn't mean.
Right. So like this to me, that was a massive volume candle. It was a huge week. This has been in a downtrend for a while, right?
Yeah, those long-suffering longs out there, they've got to like what they saw last week there.
But I think so. It's a trade for me. I'm not a long-suffering long, ever. Just kidding. Happens all the time. We're investors as well as traders. But that's the reality, right? Like if you're an investor, you have experienced many drawdowns that are not.
I'm a trader. Yeah. I'm an investor.
So if you look at Enphase in general, it's been in a 2-year downtrend, so to speak, right? And last week's candle took that downtrend out on volume, right? And this week we started with testing that downtrend. You know me, I'm not a huge fan of horizontal diagonal lines and whatever, but this is another one that you could trade up to a minimum of 58. I would say you could see the rejection there at 58. If not, it can go even higher. It's when Enphase behaves, it is the ultimate alpha solar stock, right? It goes both ways, though. Remember that, because just because it goes up 30% doesn't mean it can't go down 30% in the next candle. So keep your stops tight and stuff like that. But this was a noticeable difference compared to. Ooh, that was a nice chart. Go back to that one.
Yeah.
Breakout retest. Anyway, those are the couple of names. I am still not too happy with taking on too many mega caps in general. You can do mean reversion trades, like I'm in a Microsoft trade. Meta Meta is one that looks strong, but every time it looks strong, it just ends up shitting itself. So it's working through the technical repair. Those are actually, I think those are the two cheapest mega caps out there. They're trading at what, 22, 23 PE or something like that. If you're into fundamentals and that kind of shit. Good stuff to recognize. Obviously, Nick, we talked about this morning. Spot, Netflix are starting to show a backbone. They actually started this entire. We haven't been talking about Netflix being a leader for how long now, right? Since February
the beginning.
Since February of 2025. While they still pushed up the markets in general and had a huge move, this has been not leading, and you're starting to see at least short-term bottoms. We just need tech to stop going down. We don't need it to lead. Leading would be great, don't get me wrong. But as soon as it stops going down, the sell pressure ends in a lot of stocks that are non-mega caps, right?
I'm putting a limit order in on Netflix at 69.69 for the culture.
That's exactly where mine is.
For the culture.
Hey, man. I know I missed a decent amount of the upside. When we talked about, when I told you guys I sold Netflix as 912 or 920 or something like that, right? But it's now below that, like less than a year later, right? So I'm still not deploying any capital here. I will, because Netflix out of downturns tends to produce pretty good results if you have the patience, right? And so if we are tracking what we were tracking the first time around, which is the 2012, if you can go, are you on the weekly chart on Netflix?
Yeah. Yes, sir.
Go back to the 2012 Flickster disaster, where we talked about Netflix could be in a potential 80% drawdown in 2022, right?
Oh, 2022.
Oh, 2022.
No, it's a comparable move, but
yeah.
What I'm saying is, like, if you look at Netflix, once it reclaimed the 70% drawdown or 80% drawdown, it basically sat sideways for how long? Almost 2 years, year and a half.
Mm-hmm.
And so we are in a very, very similar pattern. And you can say it's the deal of them trying to buy Paramount or whatever they're trying to buy, but it's very similar. It's a wide range for a couple of years, and then when it breaks out, it's basically reaccumulation, right, at the highs. So something to keep in mind.
Nick, what are you watching that you like?
I mean, what I was kind of focused on was kind of GP's mention of, like, you know, boomer names, real world stuff, was kind of the IYT, the KRE, XLE, and then I actually caught Delta.
You like
too.
IoT, Samsara?
IRT.
Yeah,
because you have like ODFL in there, XBO, SAIA, kind of like the more expensive, like railroad shit and trucking stuff. But I kind of like, I don't know. I feel like the IGV, like I kind of mentioned earlier,
it's so ugly you like it.
Yeah, it's. I feel like it's kind of overdone. Like I kind of pointed out in the chat, like check out Net, you know, right now, like Cloudflare.
Earnings after the bell.
It's reclaiming that pivot low, that 182 that it set back in late November. You know, Snow even kind of like looks interesting.
No.
I'm certainly not looking to get involved. I'm just trying to look for clues in terms of like the overall.
This is the what you
market.
like segment, not the. I wouldn't blame it on you if I did it with GP.
Well,
right?
I mean, when I think about like the Qs and I think about technology, you know, I think software's in there. Like, and I think that we don't necessarily need IGV to like V out of here, but if the waterfall could kind of stop, I think that would be fantastic.
If the waterfall could not waterfall, yes, it would be fantastic. I completely agree with you. I still think there's a good place for a lot of software. Ivan Hoff on StockTwits posted a great chart over the last 7 or 8 years of semiconductors versus SPY versus IGV.
Oh,
And I retweeted it with "I am the semiconductor" because you guys know I've bought so many semis. But I do feel IGV massively underperformed those three, or actually, it's now underperforming SPY over that same period of time. But I'm with you, Nick. That's the reason why I started my ServiceNow position, right? Is because there are going to be winners in the software space if the waterfall can stop waterfalling.
I mean, like Crowd was one that I have been kind of stalking. I'm kind of kicking myself for not trying to catch a knife a little bit, but just looking at the daily, we kind of had a breakout failure again, back in early November, which led to kind of the undercut that happened last week here. And I think like Crowd, you could probably play it against 400. You have it's under the 200-day, and all the major moving averages are kind of pointing down, but it is ultimately in a range. 1, 2, 3, 4, 5, and this is the fifth.
Just gave our software the mouth fart on the chat.
Yeah, I'm not saying like this should be your high priority watch list. I'm just saying I'm looking for clues. I'm looking for things that I'm scanning. But like let's say, and I like high price stocks. Like let's say if I could take a starter in Crowd here, risk 400, it could pop to 435 and kind of hold there. Maybe it puts in an ABCD leg up. And on a larger time frame, like I kind of like how Crowd looks. I don't like that it's below the major moving averages, but I don't know. I think with software, it's the same idea with the Qs. I think we don't necessarily need it to go up. That waterfall is fucking nasty. And it basically held the low. It basically held the lows of the prior range. Didn't quite get down to that 77-ish. But it did hold the 4-year MA. I don't know, definitely better setups. Like there's better setups, better trades out there. I don't know. Let's move on. I don't even know why we're talking about IGV.
Well, it's just things that you like. It was just things that you like.
Oh, sure.
Can we talk about why I think it's a dead cat?
Yeah, no, go for it, GP. What chart would you like me to pull up? Just the IGV in general?
So, I think if TTD was red today, I would say it's not a dead cat, and I would say it's more than that. But the fact that TTD is pumping, this is a short covering moment. I think everyone thinks that IGV is going to bounce. So I think the contrarian in me says we need one more flush to really punish everyone. But what I don't like about things is if you're looking at a lot of these software names, maybe it's Crowd is the one that's actually held, but ServiceNow is how far below the 4.9 candle? The second best day in NASDAQ history, right? We've talked about this level. Like it's a level that Meta just held for a couple of months now. Microsoft just held. ServiceNow is the leader, right? So for it to get just absolutely manhandled at that level, I still think we have lower to go here. I've tried a couple different positions on now. It is working for now, but I think it's a trade before we get the final bottom, right?
That's right.
And Ben, I know you like ServiceNow. I don't disagree with you, but when these massive buy candles come into the markets and we trade well below them, there's something that just doesn't sit well with me. Compare now to Microsoft, right? Microsoft had a similar beatdown in the last 6 months or so, and it got right back to the earnings gap, and the 4.9 candle is what it tagged on Thursday, right? The 4 candle 9. So like you have this this very, very significant point in our recent history. I would say in our entire history, which is the second best day in the NASDAQ, right? In the 60 years that it's been trading, we had a 12% update from there. So anything that's sitting below that, I would say there's something more wrong here.
We can look at all the technicals. You're below the weekly 200. You're below the daily 200. Like, yeah, I mean, it is negative, right? Like it does not look good. But sometimes your boy jumps in the dumpster.
Yeah, no, that's fine. But for me, it's like if TTD is up, it's not a software thing, right? It's a short covering thing is the way I'm thinking about it, because TTD hasn't been able to find a buyer since Obama was president. So to me, it's like if you were, and it's still expensive, right? If you were shopping in the software space, you still don't want to buy TTD. You still want to buy leaders like ServiceNow, Crowd, which Crowd is the stronger name, Nick. If you're looking at it, it's holding the 4-9 candle.
So I mean, I don't want to get too macro or too fundamental on software. We only got 5 minutes left, but like there are a lot of super expensive names. I'm not talking about price per share. I'm just talking about their multiple, right? Like their forward earnings are ridiculous, and what those estimates are. So there's going to be a lot of these names that are going to continue getting taken to the woodshed, and AI will absolutely disrupt a lot of these names, but there are going to be winners. And where do you start buying those winners? Where do you start picking out who you think those winners will be? That's the question. And I think ServiceNow, CrowdStrike are probably two of the better names in their respective areas. I saw Dan Ives yesterday talking about the names that he liked. CrowdStrike was in there. Microsoft, of course. Microsoft is ubiquitous, right? So there are names out there that are likely to stick around in some capacity, but how bad is the slaughter going to be? And for a lot of these names, they're going to continue to get slaughtered until they go to zero. I just don't think CrowdStrike or ServiceNow are two of those names.
Yeah, I don't think so. I just think, if you're in the software space, my pivot for everything right now is that 4-9 candle. So it's a pretty historical candle in my opinion. Overall, it was a massive reversal after a 2-month 26% move down in the markets, and it had historic volume on top of that. So that's where I will continue to focus, right? Like if the markets are sitting at all-time highs and you're below that candle, if the markets turn its distribution, this is going to get ugly, right?
Yeah, in that scenario, there's definitely better horses to be on, for sure.
So I rather, because of where we are in the markets, I rather use that as my pivot for my pursuit of preserving mental capital through this chop. That's just for me.
GP getting his flowers here in the chat from Conrad. Thanks, Conrad. Nick, we got 2 minutes.
Yeah.
You want to drop some last words on us, or any type of wisdom you want to throw at us, or just tell the chat to fuck off today, or anything?
Yeah, everyone just go fuck themselves. No, I mean, just trades are working both directions. You know, kind of we say the same shit every week. Manage your risk. You know, we're retail guys, so scanning and the alerts, putting in the work, like that's our edge, or a big part of our edge. So, I don't know, lock in, as the kids are saying these days.
Lock in. GP?
Go Knicks. Detroit, you're a bunch of posers, in my opinion. Should be an awesome playoff regardless. I like the way Detroit's playing overall. They hustle and stuff like that. If you're a basketball fan, we are coming into finally, after decades of destroying the NBA, some fire and some grit and some fighting, and bring back the 90s. No, just kidding. But I like to see the passion. So in that regard, passion is really important, but pivots are even more important. So have passion about your trading, but use pivots. Horizontal pivots are a lot more powerful than your diagonal trend lines, than your cloud support, your moving average. Why is that the case? Because that's where actual price happened. And if you get a horizontal pivot with diagonal and moving averages and all that, that's just great confluence. But if it breaks, get out.
I just got my Mikal Bridges on my fantasy team, GP. So I've got a Nick. I've actually got the Nova squad on my fantasy basketball team minus Brunson. So I got DiVincenzo, I've got Bridges and Hart. So we're stacking a lot of stats over here.
Nice. Hart is that guy.
But right there. Go Spurs, go forever and always. I won't leave you all with anything too deep, but be kind to yourself. I know I say that quite often, but be true to yourself. You got to find inner peace before you can do anything else in this life worthwhile. I love you guys. Love the chat. GP, Nick, appreciate you boys. Love you so much. Hey, since you're here with us on the chat, do us a favor. If you already haven't liked or subscribed, please do both. We really appreciate that. We're so close to being able to do some more shorts on the YouTube, and we'd appreciate that. So give us a subscribe. That would be wonderful. And that's it for the show. We'll be back with you tomorrow on the Community Alert Live. Actually, I won't. The boys will be here with Joey Rockets. He's going to flex them guns on you, Nick. Can't wait to watch the replay of that. I think I'll be driving, so I might get to listen in. So if you see me chatting in the chat, that's your boy. But tune in tomorrow, 1 p.m. Wednesday, the Community Rip Live. That's our time. That's our show over on StockTwit. So we really appreciate it. Thanks, guys. Thanks for tuning in. And until next time, we will see you there.